There is an investing strategy so simple, so boring, that most people overlook it completely. It does not involve picking the next hot stock. It does not involve staring at charts all day, and yet, over the long run, it quietly beats the vast majority of professional investors on Wall Street. That strategy is the index fund. The very thing that makes it sound dull is exactly what makes it so powerful. So in this video, let us talk about what an index fund actually is, why it works so well, and how ordinary people have used this one boring idea to build real, lasting wealth over time. Let us start with the basics, because the idea is simpler than it sounds. Imagine you wanted to invest in the 500 largest companies in America. Buying every single one individually would be expensive, complicated, and honestly exhausting. An index fund solves that. It is a single investment that holds a little piece of all of those companies at once. When you put money into an index fund that tracks the 500 largest companies, you instantly own a tiny slice of every one of them. You are not betting on one company to win. You are betting on the whole group, the entire market, to grow over time, and historically it has. Here is where the boring part becomes genius. An index fund is what we call passive. Nobody is sitting there frantically trying to outsmart the market, buying and selling all day. The fund simply mirrors an index, like a basket that automatically holds whatever is in it. No superstar manager is trying to guess the future, and that lack of drama is the whole point. Because it turns out that trying to outsmart the market, picking the perfect stocks at the perfect time, is incredibly hard, even for the experts. The index fund skips that game entirely. It just quietly rides the growth of the whole market year after year without the stress. Now think about what owning the whole market really gives you. It gives you diversification, which is just a fancy word for not putting all your eggs in one basket. If you bet everything on a single company and that company fails, you could lose it all. But when you own hundreds of companies at once, no single failure can sink you. Some companies will struggle, sure, others will thrive. But the market as a whole, the combined engine of all those businesses, has trended upward over the long run. So instead of trying to find the one needle in the haystack, an index fund lets you simply buy the entire haystack. Here's a part most people never think about, and it matters more than you would expect: fees. Many investment funds are run by managers who charge you a yearly percentage to pick stocks on your behalf. That might sound small, but those fees quietly eat into your returns year after year, and over decades, they can cost you a fortune. Index funds, because nobody is actively managing them, tend to charge tiny fees by comparison. We are often talking about a fraction of a percent. That difference may seem trivial, but compounded over 20 or 30 years, paying less in fees can leave you with significantly more money. Boring? Yes. Powerful? Absolutely. Now you might be thinking, surely the professionals do better than just buying everything. And here's the surprising truth. Most of them do not. Study after study has shown that over long periods, the majority of professional fund managers fail to beat a simple index fund. Let that sink in. People who do this for a living, with teams and tools and information you do not have, still struggle to outperform a strategy that requires almost no effort. Why? Because markets are unpredictable, fees add up, and consistently guessing right is nearly impossible. The index fund wins not by being clever, but by refusing to play a losing game. This is where the real wealth comes from, and it has a name: compounding. When your investments earn returns, those returns get reinvested, and then they start earning returns of their own. Over time, your money begins to grow on top of its own growth, like a snowball rolling downhill, getting bigger and faster as it goes. The catch is that compounding needs one ingredient above all others: time. The longer you stay invested, the more dramatic the effect becomes. This is exactly why the boring, do-nothing nature of index funds is such an advantage. You are not meant to tinker with them. You are meant to leave them alone and let time do the heavy lifting. So how does someone actually begin? The good news is it has never been simpler. You open an account with a brokerage, which is just a platform that lets you buy investments. From there, you can buy into an index fund that tracks a major market, like the 500 largest companies, or even the entire stock market at once. Many people set it up so that a fixed amount is invested automatically every month, whether the market is up or down. That habit removes emotion from the equation and keeps you consistent. You do not need to be rich to start, and you do not need to time anything perfectly. You just need to begin and keep going. Even with something this simple, people still find ways to stumble, so let us avoid the common traps. The first is panic selling. When the market drops, and it always does from time to time, the instinct is to sell and run. But selling in a downturn often just locks in your losses. The second mistake is trying to time the market, jumping in and out, trying to buy low and sell high. Almost nobody does this successfully over the long run. And the third is constantly chasing whatever is hot this year. The whole strength of index investing is patience. The people who win are usually the ones who do the least, who invest steadily and simply refuse to panic. So let us bring it all together. An index fund lets you own a tiny piece of an entire market in a single investment. It spreads your risk across hundreds of companies, it charges very little in fees, and historically it has beaten most professional investors over the long run. Its greatest strength is that it is boring. You set it up, you contribute consistently, and you let time and compounding quietly build your wealth in the background. No stress, no guessing, no chasing. Just a simple, steady strategy that works precisely because it asks so little of you. If this made investing feel a little less intimidating, subscribe because we are breaking down every money tool one video at a time.